But I also could see an argument where you are going to actually watch Bitcoin continue to kind of grow at this 45-degree angle, which has been happening since the ETFs got approved. And if that is true, that means that we now have broken the 4-year cycles. We have this persistent bid, and you should see Bitcoin continue to kind of grow in value. Now, the reason why I say either or, I don't have a strong opinion about that yet. I think we need to see more data to understand how parabolic is the move in the second half of 2025. If we get a lot of kind of explosive growth and it looks more like a parabolic move, then I would expect at some point us to get overvalued, overhyped, right? There's too much frothiness, and then you'll get somewhat of a larger correction because you need to get rid of that frothiness. If we continue this kind of grind up, which is kind of crazy. If you think we were at $70,000 on November 1st last year. So we've ground from $70,000 to $120,000, $50,000 per Bitcoin increase in price in less than a year.
One of the most contentious topics in today's markets is whether Bitcoin is merely a speculative asset or if it has evolved into a real hedge against the financial system's shortcomings. Anthony Pompliano begins his research with answering this topic. He contends that the function of Bitcoin is growing well beyond transient price fluctuations, and that recent adoption patterns demonstrate that both institutions and regular investors are beginning to view it as digital gold. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Where do we go from here? What's going on?
Higher, much higher, much higher. You know why higher?
Why?
Because every single thing that people continue to say is working against Bitcoin, it'll pass with time. Let me give you a couple of examples. First, inflation's been lower because tariffs are deflationary, not inflationary. People are now starting to realize that. Remember when they were telling us the recession, the Great Depression, the empty shelves, the world was going to end, people would stop trading with the United States, consumers were going to be all broke, all that nonsense. Throw it out the door. Wrong. So now enthusiasm has come back in the market. We're back at all-time highs of stocks, Bitcoin, gold, etc. Now, I do believe we are going to see higher levels of inflation, but it's not because of tariffs. So if you go and you look, I recently saw our friends over at Wasteland Capital, what an incredible name. They did an analysis. All the things that are driving inflation don't have tariffs associated with them. For example, shelter. Nobody is tariffing your house. Used cars. No one is tariffing your used car. So you go through these things. That's what's driving inflation. The things that are being tariffed are actually going down in price as predicted. If you remember a couple of months ago when I went through steel, solar panels, washer machines, 2018 tariffs, I told you the prices are going down on these things, not up. I mean, I'm not going to say it, but you could say he told you so. And so if you look at that,
he wants me to say he told you so.
No, it's just true. Because you know why? I got a lot of heat for that at the time, right?
Good.
People were really saying how stupid I
Still
was.
do.
And yeah, I mean, still some people think I'm stupid. Some people watch this video think I'm stupid. That's fine. But I told you what was going to happen. The only reason I wrote February 3rd, I went back and I read it this morning. On February 3rd, I wrote an entire piece. And what did I say in it? I said, I used to think that tariffs were inflationary. That's what I was taught in economics class. That's what every single investor I'd ever talked to had told me. That's what the mainstream media had told me, all this stuff. And when they started talking about tariffs, I went and I said, let me go read the source material for myself. Let me go check it out. Let me go see what happened. 2018. And I was surprised. And when I got that new information, I changed my mind. And that's why I came out so vehemently and said the tariffs are going to be deflationary, not inflationary. Now, what does that have to do with Bitcoin? Once people realized the tariffs aren't this big boogeyman that they thought it was going to be, people started to pile their capital back into the market. And so now you see stocks up, Bitcoin up, gold up, etc. Now, people will yell and scream like, oh, he didn't do a 150% tariff against China. Oh, he didn't do a 57% tariff, whatever. There's still very large tariffs. There's a 10% blanket tariff on all U.S. imports. That is a real tariff. Look at the tariff revenue. We're breaking tariff revenue records every month. And so I think that the thing that now is going to happen with Bitcoin is everyone's starting to say, wait a second here. There's a lot of manipulation going on in the traditional financial system. And so I need to find something that is going to actually perform. That's why I see Bitcoin and gold both going up. Now, why do I say that inflation is going to come? It's not because of the tariffs. We are going to get higher degrees of inflation over the next, call it 6 to 9 months, because they are going to print money. They're going to cut interest rates and they're going to print money. Now, you can make the argument that we do need that, right? Why? Truflation, the alternative real-time inflation metric, shows that we are currently sitting at 1.8% as of today. Now, why is 1.8% important? Well, it was at 3% in December. So if you zoom out just 6 months, all the noise, all the chaos, all the doomsday predictions, all the nonsense. We went from 3% inflation down to 1.8%. If we're at 1.8% and unemployment is just over 4%, that tells the Fed, cut rates. Guess what's going to happen? They're going to cut rates later this year. The market's pricing in up to 3 rate cuts. They start to cut rates. They don't know how to cut rates without printing money. They're going to start printing money. And so if you get rate cuts plus printing of money, guess what happens? You're going to see inflation start to tick up. Now, I don't think that inflation is going to go to 5 or 6% like all these people are predicting. I think inflation may go from the 1.8% that is the real-time metric today to maybe goes like 2.2, 2.3. Doesn't sound like that much, but it starts to be 20 to 30% increase from where we are today. So what should that do? Asset prices are going to go up. You're going to see Bitcoin, gold, stocks, everything continue higher in the second half of this year. Now, why else is Bitcoin going up? A lot of people are buying it. And you're now starting to see the ETFs. You're seeing these treasury companies. And you are also now starting to see a bunch of other types of funds. One of the most interesting ones are these real estate Bitcoin funds. So you have Newmark that's come out and said that they're going to have real estate plus Bitcoin. They've got a unique way to think of the Bitcoin as collateral as part of the loans. You have got people like Grant Cardone who are coming out and they have real estate funds that are taking some of the money and they're putting it in Bitcoin. So you're starting to see Bitcoin getting stuffed into every corner of the financial system. And they want to figure out, how do we take this asset that brings new users, new clients, new assets, new revenue, and put it into our traditional products. The last thing I will say is that a lot of the money that has gone into these Bitcoin treasury companies, most of them, the capital has been contingent on closing, which means that people have said, I will give you 100, 500, 700 million dollars, but they have not actually given it to the company yet. So if you go and you take a look at a bunch of these companies, for the most part, the funding is contingent on closing. Guess what's going to happen in the next 60 days? People are going to start closing. Today, reportedly, the Nakamoto deal is going to close. They're going to get access to their capital. What do you think they're going to do? David Bailey's out there tweeting, saying he's going to go buy a lot of Bitcoin, right? What do you think is going to happen in these other deals? So there's a lot of buying demand that is coming. On top of that, what you are going to start to see is that the people who did buy Bitcoin and they were using certain capital, a lot of that capital was hedged, meaning people were going long the stock and they were short spot Bitcoin and they were trying to lock in the premium exposure. As those things get taken off, those hedges, you are going to see Bitcoin continue to rise in value. And so my prediction is the following, that we are going to see from our 120-ish thousand mark today, we're going to run in to the end of Q3, September. Why is September? When we get close to the end of September, you're going to have the options expirations all start to happen. There will be some volatility and likely potential downside pressure. Once we get 7 to 10 days past that period, I could easily see mid-October, up only, baby, Q4 into November and maybe December. And here we go. So what you're going to see here is you are going to see the real start of what I would consider the second half of the bull market. It's going to start sometime either at the last 2 weeks of August or the first 2 weeks of September, sometime in that 4-week period. You're going to see a run up into the options expiration. You're going to see some relief that happens around the end of September, early October, and then you're going to see a much higher leg up in second half of October, November, and maybe even into December. And then where we go from there, I think, is a very interesting conversation, because I could see two different arguments. I could see, hey, 4-year cycles don't go away. There will be these drawdowns. It will be less volatile, meaning that you're not going to get an 85% drawdown. Maybe you get something more like a 50% drawdown in the bear market.
The price of Bitcoin has been fluctuating in a well-known 4-year cycle for years, driven by the halving, boom, collapse, and repeat. However, Anthony Pompliano says that this time may be different. As institutional capital enters the market through Bitcoin ETFs, the previous trend may be coming to an end. We may witness more controlled, smaller pullbacks, perhaps of no more than 50%, as opposed to massive bull runs that are followed by excruciating 85% falls. However, we might be only halfway through a parabolic run, which might still result in a much more severe correction and excessive overvaluation. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
But I also could see an argument where you are going to actually watch Bitcoin continue to kind of grow at this 45-degree angle, which has been happening since the ETFs got approved. And if that is true, that means that we now have broken the 4-year cycles. We have this persistent bid, and you should see Bitcoin continue to kind of grow in value. Now, the reason why I say either or, I don't have a strong opinion about that yet. I think we need to see more data to understand how parabolic is the move in the second half of 2025. If we get a lot of kind of explosive growth and it looks more like a parabolic move, then I would expect at some point us to get overvalued, overhyped, right? There's too much frothiness, and then you'll get somewhat of a larger correction because you need to get rid of that frothiness. If we continue this kind of grind up, which is kind of crazy. If you think we were at $70,000 on November 1st last year. So we've ground from $70,000 to $120,000, $50,000 per Bitcoin increase in price in less than a year. So if we continue this grind up, then you never get the frothiness. You never get the, exuberance and enthusiasm that then would create the scenario and environment to then get a big correction. So I don't know. It's like, which way, Western man? I don't know which way yet until I see what happens in the second half this year. But the faster and higher we go up, the more that I think we'll have the 4-year cycle and we'll get the correction. If we do not see that and we just continue the grind up, part of the reason that people got the tariffs wrong is because they were looking at it in a silo. The academic view of a tariff is if you increase the amount that it is for someone to bring their product into the US, then the person in the US who is selling that product is going to increase their price, which then will create inflation. But as people now are learning, you can't evaluate a single policy in a silo. There's the world. It's a complex economic machine. So for example, if you went back and you looked at the China tariffs, what you saw was actually there was only a 4% increase in the price of Chinese goods in America back in 2018. Why was that? The tariff was like 25% or something, right? Well, what happened? All these different people along the supply chain ate a piece of the tariff, so the end consumer was only 4%. So the second you realize that, you say, oh, this isn't an academic exercise, this is a real world analysis. And so the same thing then starts to say, well, what if consumers shift their behavior? What happens if interest rates are moving at the same time? What happens if they're printing money? What happens if there is some sort of technology advancement that actually brings down the cost of the product, even though there is a tariff? Let's say TV prices are crashing, but there's a tariff in place. What if the demand for solar panels is so exponential that people aren't going to stop buying the solar panels regardless of what the tariff is? And then all of a sudden the next president comes in and he changes the tariff on Chinese made solar panels from 25% to 50%, right? It's a big complex economic machine. So go to Bitcoin. There's not one single indicator. You can't just look at money supply. You can't just look at interest rates. You can't just look at, let's say, a hash rate. You can't just look at OTC or exchange, number of Bitcoin available. You can't just look at social enthusiasm and like the social chatter. All of these things are data points. And part of what makes it difficult to be an investor in a very dynamic world like Bitcoin is if you are going to try to choose when to buy or sell, then you are going to have to constantly take in all these data points, synthesize them, and make decisions. It's very, very difficult.
Anthony Pompliano gives us an ambitious yet ambiguous perspective for the future. He argues that stocks, gold, and Bitcoin are all rising, mostly due to the likelihood that the Fed would lower interest rates and resume money printing. Inflation and asset prices are nearly always boosted by that type of monetary easing. ETFs, real estate funds, treasury businesses, and institutional players are all vying for exposure to Bitcoin, according to Pompliano, who notes that demand is coming in from all throughout the financial system. A strong and constant flow of buying pressure is produced as a result. He predicts that the second half of this bull market will really get going in late summer or early fall, with some September turbulence but a significant upswing into Q4. Whether or not the market overheats will determine what occurs next. Another traditional 4-year cycle with a steep correction could occur if Bitcoin rises too quickly and too high. It would probably be less severe than the previous 85% falls, perhaps closer to 50%. However, Pompliano says that if the price keeps rising gradually, we may be seeing the end of the previous 4-year cycle and the beginning of a longer-term, more stable growth trend driven by ongoing institutional demand. In other words, the future of Bitcoin might go one of two ways: another parabolic leap, followed by a correction, or a steady grind upward that breaks the established trends. In any case, Pompliano is certain that Bitcoin will go in a clear direction higher, much higher. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.